Welcome back. A busy week for the markets. Let's get right to our panel. Matt Maley is the Chief Market Strategist at Miller Tabak. Barbara Duran is the Chief Investment Officer at BD8 Capital Partners. And Viraj Patel is the Global Macro Strategist at Vanda Research. It's great to have you all here. Of course, I got to start with the markets. Obviously, it's been a topsy-turvy week. You got a VIX at 20 right now, which is actually off the highs of the week. But Matt Maley, I mean, you've seen a number of market cycles. How does this feel to you?
Well, you know, one of the things that we're looking at right now is this big decline in Bitcoin and the forced selling that's gone with it. And experience tells me that when you see this kind of decline in Bitcoin, you know, I should say not just Bitcoin, the entire crypto market, that market's just not liquid enough for people to raise enough money to meet their margin calls. So they have to sell other things. What do Bitcoin owners hold? They own tech stocks. And so I think that we've gotten a little bit of the baby thrown out with the bathwater on a near-term basis. And if Bitcoin and other cryptos settle down, these stocks should bounce back. The question is, will they be able to hold any kind of bounce? I mean, we have Amazon, their growth spending is bigger than their growth in revenues. You start to worry about how much more debt are they going to have? You know, what is their cash going to be, their free cash flow, et cetera. There could be some more revaluation at some point again once we see some sort of a soon.
Yeah, I mean, Barbara Duran, if you look at a chart of the IGV software ETF versus Bitcoin, they've basically been trading in lockstep. Just yesterday on this panel, Jeff Kilberg made the point that Bitcoin's basically being treated as a cash machine. The fact that we've seen such a downdraft, there's been speculation of some forced selling here. Does it feel flushed out?
Well, I think it's always hard to know when you've had a massive sell-off like this. And, you know, we've seen this in all the risk-on assets, and that's all the big tech names. It's Bitcoin. We've had 7 days of selling, so there's a lot of fears. Okay, is there more to go? But typically, I think these kind of sell-offs, which are a big overreaction, in my view, you know, we're throwing out everything, even the hyperscalers that have great growth. I think these typically are buying opportunities. You saw that with DeepSeek last January, where you had NVIDIA down 17% in one day. And of course, what's happened since then is stock rebounded. And the same with, I think, the tariff uncertainty in April. This is not 08. This is not a systemic crisis. There's no credit issues, you know, maybe somewhere out there. But I think this will prove to be quite a buying opportunity. So the question whether you buy today or tomorrow, whenever, but these stocks are on sale in a big way.
Viraj, I want to get your thoughts on this. I mean, what was one of the biggest stories, one of the big trends last year, that retail investors were buoying the market? Is that what we're seeing now? Do they see buying opportunities?
Yeah, I think retail effectively epitomizes current market sentiment. So what we're seeing in our data is very much a retail investor that's probably selective and opportunistic, right? So a good example is we're seeing weekly retail buying of single stocks running around sort of the 54th percentile, somewhat pretty standard or average since COVID, compared to September, October last year, where that was in the 100th percentile, right? So I think it's very selective, but it's not an investor base that's completely out of the market right now. A good example, for example, this week on the back of sort of Google earnings, we saw the biggest day of retail buying in Google, in Alphabet, since pretty much May last year. So, you know, selective buying, coming in, buying this dip, kind of epitomizing what Barbara was saying there, where I think retail effectively seeing value in some of the sell-off this week.
Yeah. Okay, speaking of hyperscalers, Barb, Amazon sound like 7-8% right now, pre-market. Yeah, you know, operating income Q1 expected a little bit softer than expected, and certainly they're spending a lot here, but otherwise the numbers are pretty strong.
Yeah, they are. And certainly have to remember, they really are a conglomerate. But the key thing that people watch here is AWS. And I think they're down. It's an AI play. We're seeing all this last week as a question of who's going to make money, how fast can it be? And of course, they have upped their CapEx spending, which I see as a positive, you know, where there's criticism for whether it's Meta or Alphabet or this. This is spending because the demand is real, and they see what they have to do to build out their servers, their data warehouses, centers, you know, in order to maximize this demand. So people have to adjust. Margins will be dinged a little bit. You know, earnings may come in a little bit. This is really to set up for the future and in the not so distant future. So I think there's a buying opportunity in when these kinds of names get hit for these kinds of reasons.
Yeah, we were talking so much, Matt, about software, but some of the action we've seen in semis, especially when you think about Amazon, which has its own product that seems to be gaining traction, or Alphabet as well with their CPUs. what we're seeing in that part of the market and how that's factoring into the broader S&P moves now.
Yeah, that's so important, Morgan, because what we've been seeing for literally a month, really more than a month now, is that there's been some rotation within the tech sector, and but one of the areas that has been leading, of course, has still been the chip stocks. They're still making money hand over fist. The question is, will it ever broaden out? That's what people are worried about. The thing is, more recently, we have seen a weakness in the semiconductor stocks. So in other words, the entire tech sector has been getting hit, not just the software stocks, not just some of the Mag 7 stocks. They all have this week. We'll see if that continues, because if it does, it has no choice but to knock down the rest of the market because they're so highly weighted. I mean, it's 62% of the NASDAQ 100 is technology. So if the whole group starts going down and the indexes start going down, I worry that the retail investor, who is so important right now, is not going to rotate into other groups. They're going to rotate into cash because of all this talk of bubbles that we've been hearing for six months or more. So it's definitely going to be important to watch those. Let's face it, the chip stocks have been the most important leadership group for decades. Keep a close eye on that going forward.